in case somebody wants it. Okay, meeting's being recorded. All right. So be on your best behavior. Okay. All right. First thing I want to do is remind everybody to use our software. You probably heard me say this before. The more you use it, the less you'll like it. And I always say that with a smile, so it doesn't come off the phone very well. But the reason why I say that to people is not that the software is bad. Everybody knows how I feel about it. I love it, and I'm proud of it, always working to make it better. But the reason why it keeps getting better is because people use it, including me and others. Obviously, our customers do. If you don't use it, it's easy to think it's fine, it's okay, it's good enough. The more you use it, the more complaints you'll have, and that's okay. And it's okay to complain. It's okay to compliment. And if you compliment, then be real specific. Like Dalen sent out an email to all of Aptora where somebody complimented our software. And hopefully you all got that. And the person said that, you've really gotten your act together lately. Like this year, the updates have gotten better and mobile has gotten way better. And mobile looks like it was built by somebody that really understands what it's like to be a service tech. And you got that email, and it was really awesome to get that email. And the compliment went over really well with all of us, not the least of which are the programmers. And I'm sure tech support liked it because they get beat up all the time. And those compliments can come from customers and you can pass them on, or you can compliment the product yourself. But don't hesitate to complain about it. If you feel like it's broken, report it. This is real important. If you think there's something broken, absolutely report. What you want to do is you want to send an email to helpdesk@aptora.com, just like a customer would. This is really important. You want to be like a customer. All Aptora employees are to act like customers. So you will email the helpdesk@aptora.com. You could call Mary if you prefer. And Mary is supposed to put in a ticket, and you're supposed to get tech support. So if you have a problem with the software, you think you found a bug, then that's how I'd like you to handle it. And I know it sounds weird, but even if you do need tech support, like for example, you're not sure how to use the software, then I'd like to see you put in a ticket for that too and let somebody help you with it. And I think that that'll give you an opportunity to test our tech support. And I think it's just a better way to handle things. So feel free to complain, compliment, suggest features, and use the tech support like a customer would by emailing helpdesk@aptora.com. Now, if you have a feature request, email that to feature request@aptora.com. And I think request will go through, but I think it's actually feature request. Both of them will go through, but it's actually feature request is the correct email, and we set up a forward in case somebody added an S to it. So if you have a suggestion, that's where you want to send it. And if you're a client, one of the people you're working with, if they want to suggest something, then ask them to send it to that address. Now they can also go to the help desk on the internet, support.aptora.com, and they can put in a ticket, and one of the categories is a feature request. So they can put that in too on the internet. All right, so those are the options. Let's talk today a lot about progress billing. I have a few miscellaneous things to cover at the end, but for the most part, what I want to talk to you today is about progress billing. Now, if we were to go to the internet and search the term progress billing, then we will get a lot of results. Progress billing is an invoice that's intended to obtain payment from a customer for that portion of a project that's been completed to date. So the work we've gotten done so far. These billings are commonly issued when a project has a long duration, so that the contractor can obtain sufficient funding to support its operations. So another way to look at it is we got a job going on that could take a month, and I really can't afford to do this job for an entire month and not get paid any money at all. So what I'd like to do is I'd like to ask you to pay 10% of the job down, and then I'd like to be able to invoice you, say, 25% in a week, 25% in a week, 25% in a week, and then upon your approval that everything is okay, I'd like to get my last 15% back. That's progress billing. And that's even percent of completion. So maybe you've heard percentage of completion. Well, progress billing and percentage of completion are pretty much the exact same thing. Percentage of completion is specifically, I'm going to invoice you for a percentage. Progress billing means I'm going to invoice you as we progress. So they potentially could be the same thing. The end result's the same. But if you hear anybody say percentage of completion, they're really just talking about progress billing. That's important for all of you to know, especially in tech support and sales, because somebody might say, I see you have progress billing. I was disappointed to find out you don't have percentage of completion. Well, now you can tell them they really just mean the same thing. Progress billing just means I'm going to bill you as we progress. And percentage of completion means I'm going to bill you as we progress, but I'm going to do it as a percent of the total, 10%, 50%, whatever. So they mean the same thing. Questions on that part so far?
No.
Okay. All right, good. Thanks for the no, because that tells me, hey, they're out there listening. I always say this, it's really weird. I do a lot of public speaking. It's really weird to speak to no faces because you just never know if they're out there or they're sleeping. Like Jonathan gets up and goes to the toilet and he's not there and I don't even know it. So it's nice to hear voices.
I'm here.
All right. So now, thank you. Good. So now that we know that progress billing and percentage of completion are all the same, let's carry this forward a little bit. So how do we do that in Total Office Manager? Well, it all starts with creating an estimate. So it's really important to create an estimate, and that estimate has to have line items on it. And the more you add, the better. I mean, the more detailed you get on an estimate, usually the better off the client is. So that's one thing. Once the estimate is created, and I'll just go find one. So I already got one here. Man, I see Marlena is leaving, joining. Somebody might want to try to help her out. If you're
We're working on it, James. We're working on it.
Okay, good. All right. So it all starts with an estimate, and you want to create estimates that have lots of items on them or lots of services. The more detailed, the better. But once you have this estimate created, and usually it's more than $200, right? This is usually $10,000, $20,000, $50,000. Once you're done creating the estimate, you're eventually going to sell the job. So we're going to change the estimate status to awarded, and then eventually in progress. That means we're working on it. We're working on the job. And at some point, we might want to invoice them for a portion of it, which is called progress billing or percentage of completion. So if we want to invoice them for a down payment, say 10% down, then what we would do is we would create an invoice. Department's required. So that message box said your department is required. That's a preference to require that. So now we're back to it. Now we go down to create an invoice. It's asking me if I want to add a change order. Now what this does is this creates a miniature audit trail inside the estimate to show that we've made a change. If the customer has never seen the estimate, there probably isn't a reason to put in a change order. because we're not changing anything as far as they are concerned. But the customer can do whatever they want. They don't have to show it to anybody. So I'll say do not add. Now this dialog pops up and it says, do you want to create an invoice for the entire estimate? You can always edit it, by the way. So you can change the dollars, the percent, the quantity, whatever you want. You can always edit it later. That means you can remove items, you never sold them, whatever you want. So even if you take the first option, it's not a big deal because you can edit the invoice and you can keep creating invoices later. Or you can create an invoice for the percentage of the entire estimate. That's percentage of completion. And you can say, you know, I want to invoice them for 50%. And then when you're ready, you can, and by the way, I should read this to you. Note, this action will not copy over assigned work orders, if any. Must be done from the invoice. So if you've assigned work orders to the estimate, they don't get copied over to the invoice. Now I'll click OK. Says I don't have sufficient quantity on hand, so that means that we don't have enough of these in inventory. Do I want to continue? Yes. Now notice what it did. It copied over those 4 items, but it set the quantity at half. And that what that would do is that would have reduced the retail price of all those items by half. So I can invoice them for 50%. But the way the software does it is it puts in half a quantity. Now at this point, I can decide, well, I don't like that feature. And I can put in 1 because we sold them 1, but we're only getting $50 for that. We're only getting $88 for that. We never sold them this one. It never even got delivered. So I can modify this any way I want to and get rid of that guy. And the diagnostic fee, notice it popped up there automatically. It wasn't even on the estimate. So there's a tech support call. I found a bug in your software. Put a diagnostic fee on there. Well, as you know, when you create items, you can set them to automatically be added to invoices and estimates and so forth. And you do that over on the accounting tab, the auto add to invoice, auto add to estimate, auto add to work order. So that obviously was checked on the diagnostic fee. That's why it got on there. No big deal. We usually like it on there. In this case, we don't. Nothing is hurt. We get rid of it. So now I have a, so yeah, now I have a progress invoice. Go ahead, Josh.
So when you create the progressive billing on the little menu that comes up when you create the invoice, if you set that to 10%, it'll automatically adjust the quantity to like point something.
Yes.
Or is it always going to be like a half a quantity?
No, that quantity got adjusted by the percent that you typed in.
Okay, that's what I thought. Thank you.
Yeah, and the customer will oftentimes say, this is for you tech support people especially, that your customer, our customer might say, well, I don't really like that. There's some items that we delivered and we want to get all the money. And there's some items that never got delivered and we're not getting any money for it. And there's other things I want to do. Well, just copy over an invoice, the whole invoice, and then modify the invoice. And then if it ends up at 50%, fine, but that's a progress invoice.
Okay. Thank you.
Doesn't happen. Yeah, it doesn't happen to be a percentage of completion by definition, but that's not really what's important.
So, James, what if the quantity was like 2, and then you progress it for 50%? I guess my question is, does that affect the inventory right away, or does it wait until the entire job is completed before it starts affecting your inventory?
When an invoice is created, inventory is affected. So if the quantity was 2 and you typed in 50%, it's going to create an invoice with a quantity of 1 instead of 2, because that's half. And that affects your inventory as soon as that invoice gets saved.
Okay.
And that also is what creates your cost of goods sold. And that's what creates your income. So these progress invoices are creating income for you, and they're creating your cost of goods sold, which isn't a bad idea because let's say the job spans 3 months. That's 3 months of income statements that the boss is looking at. Well, those income statements don't look very good when you're doing a lot of work, paying for labor, paying for parts and materials. Those invoice statement, those income statements aren't going to look very good when you're not collecting any money. So by creating a progress invoice, you're recognizing some revenue to match all those labor hours you're paying for. So I'll let that sink in, that concept sink in just for a moment. You have a 3-month job, you're paying a lot of labor. Everybody gets paid weekly or bi-weekly. You're probably also buying parts, and they want their money a month. But your customer's taking 3 months. Your financials don't look very good, do they? Because you're paying for all this stuff and not collecting any money. That's why progress invoicing is so helpful, because you get to get paid some of your money. Another way to look at it, though, is what if the customer doesn't want to pay you and they say, hey, we're not going to pay you till the job's over? Well, by creating progress invoices, you at least get to recognize income on your income statement. You may not get paid, but your financial statements will look more accurate month to month. So you create those for internal purposes, and they look better from month to month. Your income statement looks better from month to month because you're recognizing income to go along with all the effort you're putting into it. Questions on any of that?
I got another question. I was just wondering, how would you create the second invoice, the second portion of the invoice, to recognize the remaining balance?
You go back to the estimate,
Uh-huh.
and
okay.
you would create another one.
10-4.
Let me get rid of this here. Forgot the password. I have the cutoff date set. So remember that feature, that cutoff date. I'm going to go back there because that thing's going to bother me. Because it's going to interrupt me all day long. Go to company, company preferences. Where is that?
It's actually cutoff date.
Oh, there it is. Yeah, I was looking for that word, couldn't find it. All right, so I'm going to get rid of the cutoff date. Okay, so we would, at this point, we'd save and close. Oh, I did, saved and close. So now we're at the estimate again. Let's go to menu. Let's go to customer job, go to history. And let's go to estimates. And so there's the estimate. Let's have a look at it. So where did the, interesting.
Refresh it.
Oh, all right. So, no, that's cutoff date. Kitchen remodeling. What I'm surprised to see is why I don't have amount billed, percent billed. I don't see that. That's confusing me.
Unless you didn't save it.
No, I know I did. Yeah, that's strange. So I'm not sure why that is. It may be something with my setup here. So ignore that because, oh, the total. How did I get a total of 0? Oh, that's what happened. Okay, so sorry about that. See, there's always an answer. That's like tech support for you. So, there's always an answer. Sometimes you think you're doing something right, especially if you're talking about it and doing it. Okay, so now we got a $10 invoice. And then I'll hit refresh. Okay, so there's a $10 invoice against the estimate. So we go back to the estimate and have a look at it. And it says, okay, well, you got a 286 estimate. You've billed them $10. That's 3.493% of it. And then you'd go back to the estimate, and we might as well just open it from here. And again, we click menu, create an invoice. We could create an invoice for the entire estimate if we wanted to. So now it's saying, hey, when you create this invoice, you're actually charging them for the same item more than one time. Is that really what you want to do? And I'll say yes. And in real life, we wouldn't be. And there's the diagnostic fee on there again. And then I can get rid of the items that I already charged them for, or keep them and charge them some more money. And then now I got 4167, hit save and close. So we'll go back to history and have a look at it. Hit refresh. So now the estimate says, well, you've billed them 18%. And if we ever get to 100% and try it again, it'll give us another message box. There's plenty of message boxes telling people what you're doing wrong, but they're easy to not read, especially if you're interrupted. Like here I am talking to you guys, and I'm not paying attention to all of it. But it'll tell you you're already at 100%. Are you sure you want to create another invoice? And then you'd probably say no. Now, another thing is when you're done with this job, many companies are actually going to be collecting their retainer. So a lot of times, depending on the contract, a lot of times there is a so-called retainer on a job. So we say that we're going to do a $100,000 job for the school down the street. It's very common for the school to say, we will pay you X amount down, and then we will give you 20%, 20%, 20%. But at the end, we're keeping 15% of the job. We're keeping 15% at the end of the job. And we're going to wait 90 days. And if nothing goes wrong and we don't have any trouble with you, we'll give you your 15%. But if we have trouble with this job and we have trouble with you, we're keeping your money to make sure that we're protected. So if you have to come fix things that you did wrong, we'll have 15% of it, $15,000, and that makes us feel comfortable. And then once everything's fixed and everything's taken care of, we'll give you your money back. That's called retention. And so your last step could be to create an invoice for the retention. Now, some people might say, I don't like creating all these invoices. We want to create just one invoice each time. You can't do that. That's just not accounting. Accounting doesn't work that way. So you do have to create multiple invoices. Then they might say, well, my customers don't want to get 3 or 4 or 5 invoices because it looks bad. Well, if that's the case, we have to remind them, but that's what we're doing. That was the contract. The contract said 20%, 20%, 20%, 10%, etc. That's an invoice. Otherwise, how do you get your money? So you have to give them those invoices. If you had forget software for a minute, if you had paper invoices, you'd fill out an invoice each time. You'd probably write on the invoice 10% of the total $100,000 job due on the 17th as agreed to on the contract. And you'd hand them that piece of paper. And then you'd give them another one and another one and another one until finally you collect your retainer. But each time they're going to want a receipt from you that they paid. You remember in the old days where companies had will call or layaway, you could go up to like Sears, who's dead now, but they had layaway, and you handed them an item, a tool, a dress, whatever, and you gave them a couple bucks to put it on layaway. And you didn't walk away without a receipt, did you? No, you'd say, I need a receipt. For what? What do you need a receipt for? To prove I just gave you $5. That's why. And if you come back and give them $5 more, you're going to want another receipt. They're not going to ask you to bring in the old receipt and they're going to write on it, paid $5 more today, James, right? They're going to give you a second receipt. So that's what Tom does. Now, you notice, by the way, you tech support people and anyone that wants to be a trainer, you notice how I give you an example to close the book on the debate, because your customers will tell you weird stuff. I only want there to be one receipt, but I want to give them 4 invoices. How? So you can't just say, well, sorry, the software doesn't do that. If you want to be a consultant or a trainer or high level, you want to give a better answer like, well, that's not possible because, and then they say, well, that's ridiculous. Well, you remember layaway? You remember how layaway works? I don't know if you're old enough to remember that. And then you paint the picture. You give them the picture of layaway. And you do what I did. You paint that picture. Because then what do they say to that? They realize that they're asking the software to do something that's not according to generally accepted accounting principles. All right, questions so far?
Yes, I have a question in regards to the percentage billing.
All right.
In the software, if we're doing some kind of construction project, and let's say we've completed 50% of the project, but we only invoice the customer 25% of the contract amount, we would be 25% underbilled in that situation. I was doing a demo yesterday, and she asked about over-under reports, and it seemed to be related to this. And I was wondering, do we have over and under reports in the software, like percentage of completion reports? Because it seems like all that would be tied to jobs and things that are, well, being billed in percentages. That's why I asked.
Yeah, we do. I'm going to get to those. Okay. Now, keep in mind, one tricky thing for all of you, we experience in sales a lot. And I imagine you guys who are in tech support are going to experience this too. You got to be careful with words that people use, because it's easy to say, no, we do not have percentage of completion. We just have progress billing. Or, yeah, we just got progress billing. We don't really have percentage of completion. Do you have an over-under report? No, I looked around. We don't really have one of those. Well, we do, but we don't call it over-under. We may not call it percentage of completion, but we have that info. Like if you say to me, do you have an over-under report? You're not describing a GAAP report, an official report. So like, for example, if you say to me, do you have an income statement? The answer is yes, we do, because an income statement is an official word. That's officially what you call it. But if you said, do you have an over-under report by job? The answer is no. I looked. I don't see one. But we do, because we're showing over, we're showing under, and we're showing the job. But we don't call it job over-under report. So you have to be careful about what they're asking for. So if you're good, if they say, do you have a balance sheet? Do you have cash flow, statement of cash flow? But if they ask you, do you have a marketing return on investment report? You might say, well, what kind of info are you looking for? Oh, yeah, we have that. We just don't call it that. So I'll get to that, Jonathan. I'll get to those reports.
Okay, thanks.
So that's the basics of it. You typically start with an estimate, and you build invoices from the estimate, and the invoices are a partial amount of the total estimate. And you can do that in many ways. You can change the quantity of all the items. You can change the price of all the items. And there's other ways too. And which one do you do? It just depends. Depends on the contract. So what some contracts do is some contracts say, as you deliver these items right here, as you deliver them, I'll pay you for them. So when it's time for you to bring the oil burner motor and the electrodes out to the job, when you bring them out, I'll pay you for them. And if you have labor on here, like a bunch of labor. So here's $4,000 worth of labor. I'll pay you 10% of the labor too. So when you deliver the electrodes, I'll pay you for the electrodes, however much they are, and then I'll give you 10% of the labor every day. It just depends on the contract. So you don't really have an answer for them. They have flexibility. So again, when they build the invoice, they can remove items and charge the full amount for the remaining items, because maybe that's what the contract said. Or if the contract said, look, I just want to pay you half and half, then they can have they can do an invoice for half, and all the quantities are only going to be a half, which might seem weird to you. We can't sell half an item. Doesn't matter. We are going to sell half an item because we only want to recognize half our costs. You get that? Half our costs. And we only want to charge them half the amount. So it makes sense for the software to turn a 1 into a 0.5. And then when you do the second final invoice, because that's what the contract said, 2 invoices, half now, half later, then it does another half, and everything's finished. So you notice it all depends on your contract. So the software allows you to a lot of flexibility. It just depends on what you promised you would do to your customer. All right. So that's basically it. That's how to do what we'll call progress billing, also known as percentage of completion. Now the next question is well, how do we get reports for all this? So let's talk about that. Before I talk about reports, let me remind you that we have one other feature related to progress billing or percentage of completion, and that's called Aia Payments. So when you do an Aia payment, you're actually doing a percentage of completion. Now, the difference here is this is very official. So I just got done telling you that there's a lot of flexibility. You can do this, you can do that, you can do the other thing, but not with Aia. Aia is standardized. So the Architect Institute of America many years ago said, we're sick and tired of all this different ways of getting invoiced. Everybody's got a different invoice. Everybody's got a different idea. We're going to standardize it. So the Aia people got together and they created a standardized way of getting charged on a job. Okay. So if you typed in Aia billing, the internet is just full of answers to that question. So what is Aia? Remember, Aia is a certain something. It's very specific. So in 1992, they got this all worked out. And now, they have something called a schedule of values and a billing index, and they have official forms. You don't get to just make up a form. They have official forms. And that way, when you get an invoice that's AIA compliant, you know exactly what you're getting. There's no surprises. So Total Office Manager has AIA billing built in, and you can use that feature if you want to invoice people, and you'll be doing it according to the AIA rules. And we won't train on that today. But just remember, this is progress invoicing. This is progress billing. This is percentage of completion. And you have the option of using this feature, and you can use it even if you don't need to. So remember, one option our customers have is, even though their customer wants progress billing, but they don't care about AIA, they can still send them an Aia payment application. There's no reason why they can't. And the person receiving it might like it because it'll show everything. It'll give them great detail. So they can go in here to print preview, and print that to a form. And so here's the job. Here's the payment we're asking for. So that's the money we're asking for from them. And it shows how much we asked for before. So the contract amount, any change orders? Nope. How much have you been given already? How much do you want from me? Is there a retainer? How much is left? So it's all here. And then there's a detailed sheet. This is called the schedule of values. So this is all the stuff that was on your estimates and how much it's all worth and how much of it you completed or you're charging me for and how much is left. So this gives you all those details, so right here, this is an AIA payment application, but they can still use it. So if somebody were to say to you, well, I need all these details on the job and the invoice isn't enough, you could show them this. They don't, again, the person receiving this doesn't have to demand AIA payment applications to get one, because when they get this, they might be really happy with it. And notice it doesn't say necessarily AIA across the top. It mentions it in here somewhere, I believe, but it's not a big deal because they can pay off this. So they can have an AIA payment application. Questions so far?
No.
Okay.
You have to enable the AIA payments in the preferences, correct?
Yes, in two places.
AIA.
Yeah, there used to be a day where we did not include AIA. There used to be a day where we had a cheaper introductory price for Tom, and we would leave AIA and Sales Opportunity Manager out. Nowadays, we typically include it with an expensive sale, and all of our hosting gets it typically. But the first thing they have to do is make sure it's activated here. And they can only activate it when they own it. And by the way, that's done through our licensing manager. For those of you at Aptora, they have to have a piece of equipment, AIA, and the user defined field has to have a 1 in it. Otherwise, they can't activate it. That button won't work. Once it is activated, it still doesn't show up. And they have to go into preferences somewhere. I kind of forgot where it was, but they have to go into preferences and turn AIA on. I think it's here. Maybe not. We have so many preferences, I'm starting to forget what they are, but they have to go in and turn the preference on for AIA billing to be shown. And they just check the box. So the question is, do you guys have progress billing? Boy, do we. Do you have percentage of completion? Absolutely. Yeah, the two are related. And we definitely have you covered there. So that's the answer. We definitely do. All right, so now we're a manager and we want to get an idea of our jobs that are going on. So we're going to go to reports and we're going to go to contracts and jobs and we're going to go to jobs. And we all know about job costing reports, but we also have one in here called progress billing. That could say percentage of completion. Estimate versus billed. That's the same thing as estimate versus invoiced. Remember, there's no official terminology on this. The generally accepted accounting principles come from a governing body. It's a non-for-profit group of people that decide all this. And there's a lot of things that haven't been made official. So progress billing is the same thing as percentage of completion. Estimate versus billed is the same thing as estimate versus invoiced. So this is our first report we would go to. And I'll just hit preview and see what comes up. So that's going to show us the date, the status, the amount of the estimate, how much has been invoiced, the percent, what's unbilled, the balance. That's the start. And if we wanted to pick just one job, we could go find that kitchen remodeling job that we picked earlier. And you can just have one job on there. So the reason why we saw all that information is because we had everybody picked. I should have paid more attention to where it was, but you get the idea. So you could go pick that kitchen remodeling job and it would just simply show you that one. And then you have other options. You can say, you know, I only want to see estimate statuses that are in progress because I want to see how we're doing. Or it may be the ones that are closed. We're done with the job and I want to see how well we did. So you have, that's why those options are there. And that's where you compare. That's where you'll be comparing your estimate versus your invoiced. And that's showing you progress on your billing. Jonathan, you had asked about that. Any questions on that part?
You know, I'm going to end up having to talk with her more because I showed her this report, and she was acting like that wasn't answering her question. So she was like, do you have an over-under report, you know, all that. And I showed her this. I showed her the other ones, the job costing summary, like as much as I could to try to answer her question. And then after reading online after it, trying to learn more about it, I was thinking maybe it's because she wanted to go in and like make WIP adjustments, because once you realize if you're over or under, your next step is to post a WIP adjustment. I don't know. I'm still learning about all this, so this is all construction, and but I'd like to know because some of these construction companies are very large, a lot of employees, so big money.
Yep. Yeah. So you know, and you can tell people, hey, try to be patient with me. You know how long it took you to learn your job doing new construction, progress invoicing, etc. In order to answer your question, I pretty well have to know your whole job. And so what you want to do is make sure you get to meaning. So what this report does is it shows you your progress on billing people. How much have we billed people? So in other words, I might say, hey, Tim, do you guys have some kind of place, a report where I can go in and, you know, see who owes me money and how much we've billed them and what's left and you know, because we need that. Well, sure I do. So this report shows you all the jobs Well, can you do it by status? I don't want to see jobs that are already done. We did last year. Well, you have a date range, you have a status selector. So yes, you can pick a date range, pick a status selector, pick a job name or a whole family if you want. But this will show you how much the estimate was for and how much you ultimately have invoiced them for and what's left over. So that takes care of anybody asking about how do I know what we charged, what we billed, and what's left over. And then you also have, of course, accounts receivable reports where you go in and print out a whole report to show you how much they owe you, but that's less detail. So now somebody might say, well, I guess that'll work, but we also need an over-under report. Ask them what that means. What does that mean to you? Well, we want to know how much we went over on what? On like what we thought was going to happen. So you're narrowing it down, right? Because they've been using these slang terms, these slang words for years. And in their world, everybody there knows what they mean. And they get to thinking that it's an official word, official term. And they don't understand why you're confused, and they're starting to think you don't know anything. So it's important for you to delicately tell them, these are just words. And we oftentimes call things different. Like we all know what a balance sheet is, but an over-under report is not really a thing. That's not an official title. So what are you trying to get at? Over what? Under what? Here's probably what they mean. You go back to the same place, jobs, job estimated versus actual. That's over, under. So what are we over and under? The estimate. What do we care about? Our estimate. Why? Because that's exactly what we thought was going to happen. We thought the job was going to need $100,000 worth of stuff, and we thought it was going to take 100 hours. And our pricing was all based on that. That's our estimate. So I got to know how we did. So you're interested in comparing the results to your prediction, the estimate. Yes, that's what I'm trying to tell you. Okay, well, that's the job estimate versus actual. So you create yourself a detailed estimate detailing out all the labor, all the parts, materials, equipment, everything you thought that was going to happen. Did you need a subcontractor? Yeah, that should be a line item. I got a line item, all of that? No, you don't have to do anything you don't want to. I'm just telling you that the more line items you have, the greater the detail of the report. Let me just show you. So when you run this report, it'll show you not the estimate, it'll show you every part that was on the estimate. Every single thing you thought you were going to need, and how much you thought you were going to pay, and how many you thought you were going to need, and the actuals. And where's the overage, underage? It's called difference here. I could call it over, under, or I could call it difference. You get that, Jonathan? That's the point here. Is over, under could be, yeah, so this could be the over, under report. It could be the differential report. Either way, there's no official word. Diff was just easier to write. So there it is. This is your over, under report.
What about the monthly income statement, profit and loss statement? Like if we're overbilled or underbilled, how can I go in and fix that in the software so that it will reflect correctly?
Well, I'm not sure what you're getting at there, because this is reality. There's no adjusting this. You thought you needed 100 feet of wire, and you ended up needing 400 feet of wire. And so that cost you 4 times more money than you thought. But you promised you promised you'd charge them only so much money. So your income statement is showing income equal to what you charged them, but it's showing cost at 4 times more than you thought. There's no adjusting that. That's just the reality of it.
Yeah, I think in the perfect world, people they'll bill out exactly what they've done. If in the perfect world, the challenge is to match up accounting for invoicing and costs as closely as possible to the actual construction progress that's occurring on the project. But I figure that a lot of times they're not gonna have that ideal happening. So if they invoice 50% of the contract and only 25% of the project was completed, you'd be 25% overbilled. So I think what they do, these construction companies do, I think they go in and make whip adjustments or something like that, so that their final reports are correct. That's kind of what I was getting the feeling when I was talking with her. But I told her that I think it would be best to schedule a demo with you in the future, so I can see see how you would answer it. But that was the difficulty that I was running into. We went down that rabbit hole.
Yeah. Yeah. Well, I'm not hearing what she said. I'm hearing it from you. But what I'm hearing from you, my comment would be, I can't really comment on what you're referring to. I don't know what it means to make adjustments. Keep in mind that all of this is supposed to reflect reality. So in other words, it's important that you guys create an accurate estimate that has everything that you think you're going to need, all the equipment, materials, subcontractors, labor, and anything else like permits, shipping, freight, and detail it out on the estimate. The more detail you have, the more of these line items you'll have. You see, each one of these is a line item on an estimate. So if you need roof paper, you wouldn't have miscellaneous roofing materials. At least I wouldn't recommend that. If you know you have to order roof paper, then you put that on the estimate as a line item. Oh, that's a lot of work. No, it isn't, because you can turn the estimate into a purchase order. And if you're going to create a purchase order for roof paper, you're going to have to type it into the purchase order anyway. Right? So you want line items for everything. Now, once you have a good estimate, you'll have a good estimate portion. So these estimated columns are going to be right. They're going to be correct. And then when you start invoicing people, then it's going to start creating your over-under. You were over here, you were under there, you used more, you used less. The difference was greater or less than. They're all the same thing. When people start entering timesheet entries, go find labor on here. So here I am looking at items. These are all items, right? We keep going, keep going, keep going. And then we have, finally, the totals, but we have all of our labor. So if you detailed out the labor, for example, it was 10 hours to go pick up everything and deliver it. It was 50 hours to frame it out. It was 40 labor hours to do the roof. It was 18 hours to do the coil. It was 18 hours to do the electrical. Then you will see every one of these from the estimate compared to what the timesheet said. Because on the timesheet, you can select every one of these items. So you go into your timesheet and you're entering labor, and now you got over, under for all your labor. And so labor can be one line item if you want it to be, or labor could be 10 or more line items, and that will give you, for a little bit of extra work, it'll give you more detail as to where you went wrong. So we have a great detailed over-under report, don't we?
Yeah, I think that that's let's see how they call it, it looks pretty good. It's just after that, I'll try to find out more about what this WIP adjustment is, because on all of that, on the estimated versus actuals, if we do charge them differently, like if it was $1 million project and we were halfway through the project, but we've charged them more than what we were supposed to, because we're actually like, I mean, let's say when we were only 30% through the project, our profit and loss statements will be wrong, is what I believe.
That's true. Well, it's true, but remember, and this is me answering a question to a person, not just you, but to a prospect. Remember, we're just a calculator. We have, even if I can't show it all to you right now, we have the ability to do all that. If you've invoiced them too much or too little, you can go in and change that in the software. And even though I'm not familiar with how to do it, this is you talking to them, it has that capability. It has to, or we wouldn't even be in business. It's a calculator. The software is a calculator. So if you need to go in and add more info, take away numbers, if you've overbilled them, correct it. If you've underbilled them, go correct it. The software allows you to edit invoices. Of course it does. You can edit an invoice. You know that. So won't that fix it? I'm not familiar with work in progress and fixing it when we're all broken, but of course we can. So that'd be your answer to them. And if they insist on, show it to me, I want to see it, then you'd say, I have to turn this over to an accountant rather than a salesperson, because I'm in sales. And if I knew all this, plus I knew everything I know now, I'd probably change professions. I'd be running an accounting firm somewhere.
Yeah, right on.
So,
makes sense.
So that's your answer. Of course it can. Of course it does all that. But you don't have to necessarily know how all that's going to work, because it's just it'd be great if you did. I'd be super impressed. But gosh, I wouldn't expect it from anybody, because it's just it's a lot to know. Here's a tip for you, though. So what you can do is, everyone knows we're pretty similar to QuickBooks. What you can always do to brush up on something is type in like WIP in QuickBooks. And then it'll say like WIP or construction in progress. See, there's even a different term. Construction in progress is the same thing as work in progress. And then you can go in here and open that topic up and read about it. And see how it works. So check this out. So in this article, it says go to chart of account, go to list chart of accounts. Then go to list, go to item list. Well, let's do that. Go to lists, go to chart of accounts. All right, same thing as in Tom. Go to lists, go to item list. All right, so far it's identical, right? So far it's identical. We talked about this in prior meetings, prior training. It's identical. So if you know QuickBooks, then you're finding some of this is identical. So this article here would probably give you some pretty good insight as to what work in progress is. And then there's all kinds of topics on work in progress. All right, so you can always type in QuickBooks help, knowledge base articles. You can always search them and you'll discover there's a lot of similarity, like progress billing in QuickBooks. And then we'll go to images just so you can see here an image. And I don't know how well you can see that, but that says quote. That's the same thing as an estimate, right? We can rename ours, by the way, to quote. So when it prints out, it can say quote. But you see that little box? Does that look familiar to you? I can't make it any too much bigger, but you see that box? Create an invoice for the entire estimate. Just saw that in Tom. Create an invoice for a percent. Enter the percent. We just saw that in Tom. What they don't have is they don't have the retainage thing on there. And it says here, create an invoice for selected items or for different percentages. You don't really have to have that as a feature because the only thing you have to do is just create the invoice and start modifying it. So this is really not a feature because it does the same thing as create the entire estimate. It creates the entire estimate and then you just start dealing with it when you get to the invoice. So that's the same thing. A lot of times you can learn about Tom just by reading about QuickBooks. And that's why QuickBooks people have such an easy time adopting Tom. But one problem is there's many QuickBooks phonies, and they act like they know QuickBooks, but they don't. So then when they get to Tom, the boss is all happy because they use QuickBooks already. But then they don't know how to use Total Office Manager, and the boss is frustrated. But what happened is they never really knew QuickBooks. They just pretended like they did or thought they did or both. And then when they got to Total Office Manager, they were exposed as phonies. And they're not about to tell the boss, hey, boss, I'm a phony. So Aptora gets the blame. All right, so let's look at something else. Let's go to reports. And I'm going to be finished here in about 10 minutes because I got another appointment, 15 at the most. So let's go to reports. Don't forget about, well, number one, don't forget about all the other reports. So you should be in here looking around. You should be familiarizing yourself with these. But also, don't forget about custom data views. Let's go to data views and let's slide down to estimate over under details. Those are your words right there. So we decided to call it over under probably because somebody paid us to enter this data view, to add this data view, is my guess. And that's probably the title they gave it. So let's just click it. It populates a bunch of data. Now don't forget, when this pops up, the first thing you might want to ask yourself is, well, what's in here? And you start scrolling around. An easy way to do it is to click columns. And here's your columns. And check them out. Estimated cost, estimated gross profit, labor cost, estimated labor cost, estimated revenue, estimated blah, blah, blah. And then you're probably going to have reality in here too if it says estimated. So these are all revenue to date. There they are. So there's your actual. So this can be put into Excel, or this can be previewed. Wait, I'm going to hit this, preview. And then they might say, well, that's useless. Okay, fair enough. All right, let's go to setup. Let's add new. Let's make a report. So here's one that we built for you just to get you started. And these are all your fields that you can use right here. And then if you want to see how it looks so far, here it is. So this would show you a quick rundown of each job name. So when you see these, those are actually, that's a job name. And it'll quickly show you the original price, the revised price, if it got revised, through change orders. What was our estimated cost? What is our cost so far? What is our cost to finish this thing? Remember these terms. They should be self-explanatory. So how much was the original? Oh, okay. After change orders? So what's the estimated cost, our cost, how much we had to pay? Total. How much has it cost us to date? How much will it cost us to complete this damn thing? What's our percentage of completion? billed to date? How much have we invoiced them to date? How much is our revenue to date? So we've invoiced them, but how much revenue, how much income? Those words are interchangeable. How much income so far? So what's our over under? What's our estimated gross profit? And these numbers are all crazy because I'm in a demo database constantly screwing stuff up, right? So our estimated gross profit dollars, estimated gross profit percentage, that's probably exactly what she's looking for.
Percentage. Well, what about, is that percent complete